Seriously.
It's so funny. Okay, guys, we
Oh my
online.
goodness.
We online. Facebook, YouTube, Twitch, Periscope, Twitter. Hi, guys. Yeah. Hello, Morgan, Daniel, Peter.
Hi, hi, hi.
Hello.
Hey, Manana, how are
Hi.
you?
I'm really great. Okay, who shall be first? Peter, will you
Yes,
please
with
introduce
the
yourself?
intros. Yeah, my name is Peter Borvik. I'm working with a number of projects in the blockchain space. One of them is this project actually, Ronin AI. It's an AI plus blockchain. Some other projects are in the healthcare space, in the marketing space, in the just overall blockchain, whether it's permissionless or permissioned structure space. So that's what I do for a living at this moment.
Okay, Morgan, what's going on with your voice?
Your mic's off.
Oh, I was on mute.
There
Ooh, okay,
So I'm
okay,
Morgan Hill. I run a firm called Addis Capital Crypto. We focus on basically investing in the top coins right now. Sometimes we do special projects as well. It's mainly quantitative. So I've kind of bridged the gap between finance and tech my career. And I'm very excited about the blockchain space and the development. And one of the biggest things is that it's going to be our crypto for the future. Like we can't take gold on any kind of a spaceship. So makes sense. Pretty excited.
okay.
Awesome.
Daniel,
Hi, I'm
nice
Daniel
view.
Truque. Thank you. I'm here in the beautiful Michigan Upper Peninsula. Big
Oh,
country out here. So I work with a company called Symbiont. I run their business development for the alternative assets team. Symbiont has grown through large partnerships with large financial players. So we've had earlier this year we had some press releases about some work we've done with Vanguard, Citibank, State Street, Bank of New York Mellon. So it's mainly permission blockchain applications for large financial institutions.
okay, guys. What is the next big thing in blockchain? Peter,
I think
you should be
yeah.
first. Peter.
Oh, the next big thing in the blockchain space. Okay, so we should separate between B2Bs and H2H, humans to humans, or C2Cs or whatever, right? So we should be separating between public permissionless, permissioned, and private permissioned. What I personally dislike the most, what I hate the most, what I think is absolutely disgusting, is the fact that companies uh, are not investing nothing. Well, they're investing lots of money into research, but they're not investing uh, real time to try to understand what blockchain really is. They're not trying to optimize their operations. They're not willing to change the existing business models that are mostly based on the asymmetry of information. Welcome, 1913 or whatever the year, where that whole business model idea was created. They're not willing to go this route. And for the most part, they are experimenting with B2B solutions, which at the moment are mostly private permissioned. And that is not leading to any progress. It's been 3 or 4 years. Nothing happened. Literally nothing happened. There are some pilots out there. There are some POCs. But when it comes down to scalability of these projects or these solutions to the mainstream, it's not happening for a reason, because nothing happened. So what hopefully is coming slowly but surely is more of these organizations, entities, public and private companies. Uh, Hopefully, they will be looking more and more towards public permissionless or permissioned, and we see that trend happening with our clients, and we see that those conversations taking place with other organizations as well that we are consulting. Just say consulting or talking to. That's what's happening, or hopefully will happen to the B2B. When it comes down to the B2C, I mean, at this moment there is an unfortunate spike in DeFi projects that are, for the most part, not backed by anything. So I'm assuming that this is just a speculative movement. However, what is really happening is slowly but surely, uh, global societies and global people in the world are getting more and more educated on the topic of decentralized finance, decentralized management of their finances, just overall decentralization due to COVID, a number of countries experiencing tremendous economic downturns, and they are going for Bitcoin for as a solution. So there are a bunch of organizations. One of those organizations is Blockchain Center. Another organization is our organization, Blockchain Driven. We are trying to, Ronin AI is yet another organization where we are literally trying to educate about blockchain, about decentralization, about proper architectures, about what it really takes to make that revolution happen. So that was a little bit of a wishy-washy answer, but I was trying to, bring in as many facts or as many definitions or as many buzzwords as I could. So.
Okay, thank you, Daniel.
Yeah, I agree with Peter in terms of like it's important to make the distinction between B2B and B2C. In general, the consumer crowd is more focused on public blockchains and cryptocurrencies, and then on the business to business side, that's where you see more activity in the permission side. That said, I also agree that there's been a lot of POCs and projects that just like go nowhere, and that's actually why I'm pretty excited being at Symbiont, because we've actually like the things that we've announced have been like quite like groundbreaking. So the earlier this year, so there's been like 3 key announcements this year that show that there's actually movement in the B2B space, at least with respect to our technology. I cannot speak for the other permission blockchains out there. For example, back in March, we announced that GrainChain is replacing their Hyperledger Fabric backbone with a Symbiont assembly backbone for the sake of scalability and better privacy. What I really like about GrainChain, which by the way is our first non-financial application, and it's about supply chain and tokenizing commodities onto a blockchain. It actually enables farmers to sell directly to buyers through the blockchain. So even though that it's a permission blockchain where you have like different businesses in it, it enables the end users, which are farmers, to sell to buyers and to actually get paid instantly. In Latin America, at least, the way it works right now is that a farmer delivers a product and then gets paid 2 or 3 weeks later. with the method that GrainChain is implemented on the permission blockchain, a farmer would deliver the product to a storage facility where it's weighted and graded, and upon delivery they get paid, and they get essentially what is a stable coin on the system, which they can instantly trigger to send to their bank account, and they can have fiat in their bank account within hours. So that is groundbreaking, and it actually helps the farmers in terms of minimizing the use of credit lines. It ensures that they get paid instantly. It also, the marketplace that GrainChain is developing now allows matching unknown buyers with unknown sellers, which means that you can actually like increase the liquidity, find more people to buy your product, so you can actually have more competitive rates, more competitive pricing. So the farmers end up with more money in their pocket, faster money in their pocket, and it reduces the risk, because essentially when you send the grain, it gets settled instantly. Anyways, that's on the supply chain side, and I think what is very important about this solution is that in supply chain, the reason a lot of these other solutions out there that you see like big projects about supply chain, they fail because blockchain in supply chain brings three characteristics. One is traceability, one is transparency, and the third one is tradability. The tradability component, which is the payment side, requires a certain level of of privacy. And in general, like if a blockchain is made for the transparency component of it, so you need a special architecture to be able to provide that transparency while at the same time have the privacy required for payments. And I think the solution that GrainChain came up with is super elegant. So in terms of the next big thing, I think there's going to be a lot of like big things going on within supply chain. And then within finance, of course, there's a lot of things that we're working on. The other 2 press releases we had earlier this year was the automatic collateral management for FX swaps. This was done with Citibank, State Street, and Bank of New York Mellon. Those 3 together account for, I think it was something like 85% of the assets in custody by global custodian banks. So that's massive. And these guys are actually operating those nodes inside their firework in their pre-production environments. So this is not something where like we put a node on the cloud and tell them, hey, this is your node. No, this is actually their node deployed on premise. So for the FX swaps network that's going to go live later this year with more like big financial players. We also have a mortgages network that is going to go live, if not end of year, early next year. That network's going to have several banks, mortgage servicers, and it's going to have 2 million mortgages. So I think like towards the end of this year and early next year, you're going to start seeing, at least I can talk for the Symbiont side, a lot of large scale financial projects coming to fruition. And that's pretty exciting. And also I forgot to mention the ABS issuance that we did online. That was for a Fortune 100 company. Um, this first issuance was mirroring of a real live issuance. The next issuance that this issuer is going to do is going to be fully on chain. There's not going to be like a copy in the real world. It's fully on chain. And that's, if everything goes according to plan, later this year, which is going to be groundbreaking, to have a nice, billion plus bond issued directly on a permission blockchain.
Nice. Thank you so much. Morgan.
So I think there's going to be a couple simultaneous or in parallel, if you will, developments happening in the next roughly 12 months. One is you're going to see the proliferation of a lot of different consumer apps, like the Cash App, for example, that gladly accept blockchain and specifically Bitcoin or Lightning Network payments. I think we're going to see that at the consumer level, and it's going to be like a first, walking bridge to mass adoption. You're going to see probably the number of users double. I mean, even right now within the last few months, the number of wallets is just proliferated. And yeah, you can argue that, existing players, corporations and whatnot, like what, Dan was mentioning, are starting to figure out kind of how to maneuver the space and set up things structurally. But also there's a lot of consumers and individuals that are interested in the space and, getting exposure and, opening different wallets and different addresses with different providers. And at the same time, I think what Dan was talking about, like the setup on the institution, not institutional, but more like corporation, the infrastructure, I think we're going to see some, final, like actually deployed live solutions. I'm still trying to figure out which of those are going to be successful because there's just so many experiments out there. There's always different ones. There's, permission versus permissionless, some are more centralized than others. Like Peter was saying, I have a fear that a lot of these DeFi projects are probably going to fail. And it's the same reason that, something like communism fails. It's not because it's a bad idea. It's because it's poorly implemented just due to the nature of reality. And so that's these corporations.
Good idea.
I mean, in theory, right? Everyone being equal, it sounds wonderful, but
like,
then you say,
right
oh
here.
yeah,
Morgan Hill.
You never get anything. So it's like, that's the kind of thing I was thinking about when I'm thinking about, like, yeah, DeFi finance sounds glorious, but the reality is companies don't want their IP decentralized. They want it locked tight in a vault so that only the best hackers in the world can steal it. They don't want it free to the masses. That's the kind of, I think maybe there will be some events that will shake that up. But for now, I think they're going to try to keep that, as their mode of operation for the foreseeable future. So, it's going to be kind of hard to fit their worldview as far as a corporation into the concept of decentralized finance or even decentralized blockchain. And that's the biggest issue we have as far as implementation of these infrastructure is I think the technology is there now to do what we've talked about. I mean, it's been there for a while. These aren't hard to code. It's, you're just writing a couple cryptic lines of code to encrypt everything, and then you're putting on a bunch of databases. It's not that difficult. It's just managing how it's going to be managed, who has access to the information, how it's distributed. And I mean, I think we're going to probably see maybe 4 or 5 projects. That's my prediction. 4 or 5 projects that have real world use. It could be something easy as, a tax record, an accounting system, or something like, Dan's mentioning like Grain Chain, something where you have a supply chain logistics set up and you're able to bypass maybe, an intermediary and you're able to go directly from, producer to consumer, something like that. I think that's it. I think those two things, we'll see a couple of use cases on the corporate, the large institutional side, and then I think we're going to see more people coming in through app use and whatnot. That's what I see, at least.
Oh, great. Thank you, guys. And next question, what's going on with Twitter yesterday?
Morgan?
Fine. I'll take that. I discovered last night I think what happened is there was a potentially disgruntled Twitter employee who was just like, hey, I'm going to give you guys access to everything, let's do this. And I think he mortgaged himself and whatever, he's not working for the NSA or like something where they're going to kill him. It's Twitter. I don't think Jack Dorsey takes hits out on people. And he just basically mortgaged his career on the black market for a fee. Maybe he was tired of, the corporation or just wanted to get back at him, but he gave the hackers probably some kind of an access right, and they took it from there and went after all. I mean, the thing is, I don't see Donald Trump's account hacked, so I'm trying to figure out why they wouldn't take him out as well.
So funny.
But I saw Biden, Obama, so it's very Democratic side. They did the Twitter support. They also published the back end handles that show how Twitter actually not only shadow bans people and has something called the blacklist, which is ironic because, due to their nature of trying to appease the PC market, they changed it to denied a list, but they still have a blacklist on there. Those things were now publicly, visible. You can see that they exist, as well as a throttle control where they can reduce your level of responses down. So if you think you should be getting more traffic, you probably should have been, and they're getting, you're getting reduced because Twitter doesn't like your viewpoints on reality. I thought it was really fascinating that they all did that. I mean, and people are speculating that there's two methodologies. What I just said, if it's true, then they have everything. They have all these DMs, they have all their messages, they had all that stuff behind the scene. The other theory is that it's just like something like a tweet deck that got hacked. They got in through a third-party method. And that's just because people refuse to accept the reality that Twitter was probably hacked from the inside, because that's much scarier. But I mean, come on, that's reality, and things like that happen. And it's actually not that hard to socially engineer, a 20 to 30 something year old disgruntled technology employee, with a slight anarchist leaning. I mean, come on. We'll see what happens today. I'm really curious to see what kind of fallout or what kind of, ass covering occurs. I don't know. Do you guys follow it? It was so random last night.
I just think that it's unfortunate that just randomly, well, not randomly, obviously they use Bitcoin for everything that they were doing. But then you look at all the headlines, and then some headlines even went as far as to say celebrities and politicians get hacked by Bitcoin. It's like, what? That is just terrible press for blockchain in general. So it's like we got dragged into this,
so
and it's the same story as back in the early days of Bitcoin on Silk Road. Yeah, it happened, but that doesn't mean it's relevant.
I think that's kind of like a cover. I noticed, I mean, if they were going for a financial scam, they're the biggest idiots ever. They put something that, has an intentional tracking by wallet addresses. They're literally saying, here's where the money's going, this address. Versus they could have just, through offshore or anonymous, third-party brokers or trusts, they could have taken out a huge speculative bet against, Tesla, right? And then just used Elon Musk's account and just said, oh my God, my daughter was just killed in a Tesla or something like that, or they could have had it could have been any number of things, but they could have really just played up a news event or put something out that's really provocative from any number of these celebrities or well-known public figures and, shorted the other side of that. I mean, just any speculation we've had in the past, I think there was an event a few years ago where someone posted and, obviously completely false post about like a bombing at the White House. Within like an hour, like the whole market's just cratered. And then as soon as people realized it was fake, they recovered. Imagine if you were the one controlling that event and you put out the fake post. You'd make so much money compared to, just asking people to send you a few BTC. So I think it's a cover for something, or they just, I don't know, just so weird that they would post that out on every single Twitter profile.
Yeah, and that shows the fund manager in you. You're seeing it from that perspective. Actually, I think that shows that whoever carried out the attack may not be as sophisticated, because that'll be like a more reasonable approach to make a bunch of money instead of like asking a bunch of people to send money to a Bitcoin address, which, I mean, it's going to be traced, and those coins are going to be, well, I guess you could put them through a tumbler, but what I mean is like asking for money in a Bitcoin account. It just seems kind of like a very amateurish way of making money if you have access to, just wrangling Twitter whichever way you want.
Kid has been like a 19-year-old kid. I mean, that's when I when I was 19, I was kind of hacking a little bit. I mean, never did anything like, illegal like that. But I think, when you kind of, after you're 18, 19, like that late teen years, you have enough knowledge to kind of be dangerous and you have a lot of free time. That could be the case here. I'm just speculating, but that, I don't know, that could be also an option.
Yeah. Okay, what is your strategy for the capital markets? Like your invest strategy for the next 2-3 months?
I can start. First of all, on Twitter, isn't Twitter employees all work from home? See? So Corona must end. It's not that beneficial. I mean, people have nothing to do. They probably have all the access to databases, like somehow moved to, to the office, to the home environment, and boom, happened. So capital markets, just like before, crypto is probably the most volatile and liquid asset class out there at the moment as an alternative asset class. And therefore, well, except for, we're not talking about crude oil, like we're not talking about commodities, we're just talking about alternative assets. And just like before, the whole point is to manage the volatility of your portfolio. That's the most important part. So we need to keep in mind that Bitcoin has been growing by 100% a year on average since it started trading publicly, say 2012. So it's been 7 years, average return 100% a year. Yeah, despite whatever, 70, 80, even maybe 90% drop in 2018-ish, the growth has still been pretty consistent. So the only, I mean, where else can you make money right now? Like investing in the stock markets is just really dangerous. I just don't know what's going on. To me, the S&P 500 right now is very similar to the USO. So USO is one of the ETFs that used to be tracking the forward futures contract of the crude oil, and then when crude went down, like to the negatives, then they just completely redid the entire term sheet, and now USO is just pretty much just a supply and demand play between retail investors. So to me, the S&P 500 and all the other, the majority of other stocks are pretty much the same play. It's just like you don't know what's gonna happen. Bonds really low, commodities unexpected, and they've always been reverting in the first place. So whatever. Gold already up 30%. Silver is picking up, so maybe buy silver, right? Not a financial advice. But when it comes down to crypto, super volatile, super liquid, and it's probably gonna keep growing at 100% per year returns on average. And I'm not talking about investing 20% of your portfolio into DeFi, then 80 into. I'm just talking about the overall broad index, say market cap weighted. So in that situation, the only goal is to, if you are to invest a certain percentage of your AUM, say 5, 10, maybe up to 50% into crypto, if you are behind certain projects yourself, then the goal is to manage your volatility, because you know that the upside is still going to be roughly 100% a year, and it's going to be pretty liquid for you. So the liquidity risk is not that high, especially if you're holding your coins on your own wallets, native wallets. You fully control them, and you have access to some OTC markets that are also very liquid. So the idea is manage your risk, manage the risk of your portfolio, and allocate certain percentage of your portfolio into cryptos, because so far it has been working out really well.
By the way, Peter does not mean this by any means to be misconstrued as financial advice.
Yes,
Just
not
to
financial advice. Thank
So
you.
for
Yeah,
him a
yeah.
disclaimer.
It's private.
Yeah, no. So
Private.
like, I think on my side,
Yeah.
I think I agree with Peter that definitely having like some allocation of your portfolio to Bitcoin or like a basket of cryptos makes sense. From my perspective, if like what I would recommend my sisters, for example. So this is not public advice. This is family advice.
This is.
would would be to have a short amount of Bitcoin within a wallet. Keep it there, and if you want to get fancy, you can actually also like lend it out. There's some very legit centralized platforms out there that you can use for lending out your crypto, so you can buy it and on top of that make a return. You want to venture out into DeFi, I would say go into 5 or 10 different protocols just in case a few of them blow up. But really, like the best thing is just have some crypto because, as Peter mentioned, like it's likely gonna go up as it gathers interest. Of course, we may be in a value trap and Bitcoin may stay in the 8,000 level or so, like easily for 5 years. Regardless, if you are able to have that Bitcoin and then lend it out in these platforms and get like an 8 to 10% a year, that's better than and more secure than where you're going to end up doing in the market unless you're a professional investor. That's my take on it. And also, I think in terms of like actual active trading opportunities within crypto, leave that to professionals. I mean, leave that to Morgan, leave that to other people that are actually like doing crypto funds. On my side, I actually advise a fund called Satoshi Capital that is pre-launch. It hasn't
Mhm.
launched yet. But what we've been looking at is quantitative strategy, which is my background. And in crypto, there's a lot of opportunity if you look at price momentum and also sentiment-based strategies. Anything else, if anybody's telling you they're trading based on fundamentals and value in crypto, they don't know what they're doing. There's no fundamentals on value in crypto. It's too retail driven, and there's just people are moving by emotion and whatever hits the news. So it's really all about trend following, whether you're trend following news or trend following price action. There's a lot of opportunity there, but again, if you're not a professional, you're probably gonna lose your shirt. So go with passive or find a manager to manage it for you. And again, this is not investment advice. This is what I would tell my sisters.
Okay, Morgan, what is your advice
Yeah,
for the
yeah. I
sisters,
mean, that's
for the
what
family?
I mean, if someone's interested in getting into crypto right now and they don't already have exposure, it's probably, as Peter mentioned, it's as good as any time because of the historic returns we've had. It's a quiet market and there's decent amount of liquidity at the moment, so you can probably get in, to the top 10 coins with decent size. So that's one of the issues, depending on how much capital you're going to deploy. So the Bitcoin is very liquid, to millions of dollars. If you try to go into like the 8 to 9 digit range, then you're going to run into massive liquidity problems. Where if you're going to try to invest that into FX market, commodities, or equities, you wouldn't have no problem until you're in the billions. And that's something that we've noticed and has been one of the major deterrents for us setting up kind of arb plays between smaller coins, is just that when you get in and you want to buy, $1 million of a coin that has, let's say a displayed market cap of 300 million on, Coinbase market, like a, Coin Market Cap, or, Live Coin Watch, like one of those ones that says what the market cap is. When you actually go to pull the trigger, it's so decentralized across exchanges that even if you add up all the volume on there, in that moment, it doesn't even come close to that volume. It's just a fraction of that. And so you're going to be sitting on these coins in real time for a long time. And that's something we've basically had to accept as reality. And we're still trying to do it. We're trying to get in there. But I wouldn't recommend that to anyone as far as a viable strategy. The best thing to do, I think, is just work on getting into positions that you want, or even getting into one of the bigger firms, like even like a Grayscale Trust, even if you're just going to buy Bitcoin, because at least they incur all the liability and the risk, unless you're very comfortable and you're kind of a self person where you just like to have access and possession of the coins. And that's very similar to who people who would hold physical gold, for example. It just, you know, because there's a lot of, if you don't know what you're doing and you don't understand how private and public keys work, then you probably shouldn't be holding a piece of paper, a, you know, piece of software that has all that information on it, just because of all the risks that could happen. It could get lost, it could get stolen, you could forget it. You know, there's many things that you could incur just on the operational side that, you know, you'd feel kind of dumb in hindsight later if something happened. And, you know, there's countless stories of people already losing. And I can't remember how many Bitcoin that has been lost already just due to things like that because people didn't pay attention. But it's, you know, it's probably in the billions, I think. So I just say that, you know, for the next few months or year, we don't know what's going to happen. I think it's probably going to go up in the fall, when people start realizing that, you know, the next phase of this virus pandemic is going to take off, whether it's a recovery or whether it's a complete lockdown. The Fed is not going to stop printing. They have nothing else that they know how to do. They've exhausted all their tools, and, you know, they should have. I don't know. I don't know what the solution was there. But the point is that we know they're on a one-way track now, to depreciate the dollar. So I don't think there's any way to get off that. And that being said, you know, you need to get yourself diversified into other assets. And crypto is probably one of the most interesting because it's the newest and there's so much potential for, you know, ideas. So, you know, not really, you know, no formal advice, just my thoughts. But, you know, I would just kind of get into the top coins if possible. You know, I'm talking about like maybe, you know, Ethereum, Bitcoin, maybe one or two experimental projects, if you read about them and like the concept of what they do.
Can I comment on this really fast?
Yeah.
On Morgan's points. So, okay, so I think it's 2020, and I think if you cannot, okay, so yes, if you have like no knowledge about how to use computers in 2020, what the fuck is wrong with you, right? Like seriously, like the fact that we said the same thing, and maybe what Morgan is saying is correct, but I think at this point of time we need to direct people towards something else. They have to learn how to create a wallet. It's really not that difficult. If you have a computer, first of all, if you don't have a computer, what the fuck is wrong with you? If you have a computer, buy a computer for $1,000, whatever, refurbished, whatever, 1 TB data. You can download, say, Bitcoin ledger and Ethereum ledger, sync it completely, and hold all your crypto on your wallet. The fact that you cannot remember a password sucks, right? So either find a friend who's a developer, a bunch of those people on Upwork, right? Probably, I mean, if you say like 50, 60, 70-year-old, probably one of your grandchildren is doing a computer science major. Like ask them and consult with them, because the reason why it is important for everybody to have their own wallet is because it actually adds up to the fundamental value of the Bitcoin. Because the fundamental value of the Bitcoin still depends more or less on the number of nodes available, therefore the full synced nodes, the full synced wallets, on the number of transactions, and also on the liquidity. So if you are just buying Bitcoin using a third party, you will potentially add to the liquidity. Not necessarily, potentially. Because if you're buying Bitcoin on Coinbase Pro, you're not really buying Bitcoin, all right? You're just buying Bitcoin through the UI. You're not really buying the Bitcoin on the back end. And it's a huge, huge issue. Same thing applies to majority of other third parties, right? But if you are doing this yourself by managing your own crypto, you actually helping the fundamentals of Bitcoin. Therefore, you're actually contributing towards the price going higher. So it's actually beneficial for you to do that. Second, when it comes down to what I think the Fed's plan was, I recently was uh, shredding my mail since April. I do this like every 6 months, and one of those, well, actually two or three of those mails was from my 401k from my corporate world, and it dropped by like 30% in April. And I was like, I mean, right now it's July, so I'm like, oh, nice, okay, it's down 30%. But I was working in the corporate world not for a long time, right? So I don't really have much in 401k. But imagine those people who have 50 years of their savings in the 401k, and the entire pension, the entire savings is down 30%. I think that's what really happened. I think they started getting some kind of complaints from the consumer, whatever, the consumer, or I forgot the name of that organization where like everybody just complains to. And they decided, you know what, like if everybody's pension is down 30% or even more, because I mean, to be honest, like July earnings hopefully will drive the market lower. I mean, then people will really walk on the streets. So that's my take. But what's happening right now is disaster.
Cool. Okay. Actually, they're ready for the second stage COVID-19 for the September.
Look who I have here. Oh, I can't see it.
Oh, okay. By the way, we're
Little
ready for
wolf.
the. Oh, wow. Look at this, guys.
Say good morning.
Oh, morning.
Oh, was that husky?
Husky?
It's no, it's an Alaskan Malamute or something like that. This dog is a
Oh,
Okay.
beast.
wow.
Yeah.
Okay. Hi. Okay, by the way, we're ready for the second stage for the COVID. Maybe they can give advices for the businesses, for the entrepreneurs, for the investors. And it should be something for the health tech technologies or biotech, and how it could be worked with US election, and like the problem with China. Because yeah, it's a little bit complicated. Like a special advice for you guys.
I can talk about the kind of like capital raising in during COVID times. Because
Mm-hmm.
I've been having a lot of conversations with VCs. So keep in mind, I'm talking from the point of view of a growth stage blockchain startup. So a lot of things that are
Mm-hmm.
going on right now. The of course, one of the main issues is that right now, if you're trying to raise capital, it's a tough environment. If you don't already, if you're an early stage company, let's say it's seed stage, and you don't have a prototype, you just have an idea, then you're wasting everybody's time. You need to have a prototype or something. Um, if you're a growth stage company, then ideally you have revenues or something. A lot of VCs right now, they're gonna be entertaining only their existing portfolio companies and trying to shore them up. Uh, in some cases, they're open to new investments if they see the right opportunity. But of course, valuations are going to be depressed. Investment cycles are longer because you need to convince. It's harder to convince people under these environments. But I think kind of like the advice for entrepreneurs right now is whatever your runway you think you're raising for, just double that. If you want to raise 10 million, then try to raise 20. It's just
Mm-hmm.
any economic projections that you may have, like I mean, we thought that the pandemic could have been like one wave. We knew there could be a second one. Now that we're entering like the second wave here in the US, now we don't even know if there's could even be like a third one. Even once you start vaccination, you don't know how long it's going to take. So like the key message is, um, if you don't have a prototype, have one. And if you're raising money for a growth stage, try to raise the more that you can. It's better to lower your valuation to get some new investors in, as opposed to running out of cash. Uh, that's just kind of like my 2 cents for capital raising in this environment. Now, in terms of corporations looking like to kind of like bulletproof themselves in the future, this goes back kind of like more to the point of supply chains. There's been over the past 2 or 3 decades a lot of optimization of supply chains to the point that if any little piece goes off, then the whole thing just breaks because everything was the whole mentality of the just-in-time inventory management. And then suddenly when you have like factories and manufacturing plants closing in mass, then things break. And that's actually where I think that blockchain solutions that can connect multiple buyers and sellers within a logistical supply chain, it can actually bring that flexibility that right now the supply chain doesn't have. Some of the examples that Granchin was bringing up was that there are some farmers, for example, that they're not selling forward their inventory because they don't know if by the time the harvest comes, they're going to have people that can like work the field because they've had a lot of workers that are sick. Or in some cases that transportation is broken because same thing, drivers don't want to go into pandemic areas or the drivers themselves are sick. Then you have large corporate, like, large manufacturing plants canceling orders, for raw material because the plant is closed, so they cannot take it. So a lot of these broken chains in the supply chain can be fixed if you actually have a market where you connect all these different pieces and you allow essentially like a blind matching between all the different parties. So when one side breaks, you can quickly fix it with another participant in the supply chain. So, I mean, I guess for the future, it's just like if you can invest in those type of solutions, that will be helpful. And of course, try to diversify the sources. There's a lot of movement of activity from China into Mexico, and well, a lot of other places. But I think from a U.S. economic perspective, I think Mexico is going to be a huge beneficiary of this whole shift out of China that it's starting to happen.
Interesting.
I think diversification is probably, so the premise I just want to say at the beginning is the next 6 months is really about survival and thrival. Like if you survive, you're going to thrive. If you don't, then it's not going to matter anyway. But that's going to be the hard part, is that there's going to be so many businesses closing, and like there's a lot of delays of the inevitable right now. For example, I read something that like a third of Manhattan hasn't paid rent since like April or May. You can't exist in a society when no one is paying rent. It's going to cause a collapse in the real estate value, and that's going to cause cascading effects where the valuations will be lower, there'll be less available credit, and then the credit will basically pull cash, so then you won't have as much cash available. And we're going to see things happening around the country and around the world in the next year, I think, because of all these cascading effects that have already started. And some of them, the push has already been over and done with. Now we have to deal with the consequences. Other situations, it's ongoing. Like, for example, the food issue. If there's harvest time towards the end of July, August, September, and there's not enough people to harvest the crop, or there's not enough drivers to deliver it, or there's not enough like producers or cultivators on the back end to actually produce and finish the goods, then a lot of our food or supplements won't be getting to the stores, and you'll have shortages. That applies to pretty much everything. Food is just one of the most crucial basic staples of society to keep things from going into Mad Max territory. But that's if you can deal with those things as a business within your own case, I think you'll be able to weather the storms that are coming, if there are any. But yeah, I mean, there's a lot of issues that are still in the pipeline, I feel like, and I don't think have been worked out yet. And so I think diversification is key, because you don't know where your next crisis is going to come from. I mean, we're just looking at China now, and they've had a string. Not only have they implemented a national security law for Hong Kong and created kind of like an economic like bad will towards that area, and lost like economic incentives in the US, but you also have had massive flooding and other issues from the environmental level. So those are going to have effects on supply chain and prices of everything. So depending on where your business fits in the global geopolitical spectrum, you're going to have to make sure you have hedges against all of these things happening, or just thoughts of like, what if this happens? What are we going to do? Or what if we can't get a new supplier for a crucial component that we need in our process? And that could be anything. That could be literally, a screw that's made of, some rare metal, or it could be a developer that specializes in, a very specific programming language. There's a lot of X factors right now. And so I can't really give exact advice because I don't really know. But I would say that just try to look at the whole spectrum of what you need, and what happens if something that you've historically relied on goes wrong. Like, what is the backup plan? And just make sure those things are in place. It's basic survival, but in good times, people often overlook those basic contingency plans.
Interesting. Thank you, Peter.
I think so. I think it's a shame what's happening right now to the majority of people. I mean, yeah, shit happens, but why haven't you been prepared for it? Like, that's what I don't understand. Everybody overspent. Everybody overspent. And now they're going complaining to the government that they overspent. Like, who? they're blaming everybody, like, oh, consumerism is bad, oh, like I'm watching too much TV and too many ads, I'm buying all this stuff that I don't need. Same thing applies to businesses. Unfortunately, the majority of businesses cannot survive for 3 to 4 months. They're going bankrupt. What kind of business is that? And that's in the US, the most capitalistic, one of the most capitalistic places in the world out there. Is it really capitalism? I am really, it sounds really bad, but I'm really for fuck it. Like, if you need to fail, you need to fail. Like, there's no excuse for your, there's no excuse. The fact that you are hiring people, well, okay, you hiring people, what kind of morale as a leader are you giving to those people? And then they go to their kids and they are saying the same things to their kids in terms of the, how life should be lived. And then the next crisis happens, we have this whole generation of people who just go and complain to the government. It's not that I don't like the government much. Governments are doing superb jobs, given given the circumstances and given what is really happening right now, and given how them managing this situation. But it's not an excuse. Like, this too big to fail bullshit. It's really nonsense. They should fail. If business cannot survive for 3 to 4 months without cash flow, like, you should not exist on this planet as a business. Like, you really shouldn't. You really should not employ anybody. Go get a job yourself, right? Like, that's not cool. That's really not cool. And I think the reason why it's mostly happening is because the majority of CEOs right now, the majority of top executives out there, the majority of politicians out there are unfortunately not the first generation geniuses. They're the third generation. They're the kids and grandkids and grandkids of the geniuses that existed 100 years ago. Those guys really knew what was going on. That generation 100 years ago really built up that system. And unfortunately, they, you don't make money for yourself. You make money for future generations. That's what they've done. So they made money and power influence for future generation. Now, if you are born into a wealthy family, you most likely will be an executive. You most likely will be a politician. The amount of brains you have is probably diluted by the amount of cocaine, marijuana, and alcohol you've taken over the years as a rich guy or rich girl over your whole life. So there's really not much you can do. You do have relationships because they have been inherited again by your by your dads and your granddads. But that's really unacceptable, and it's happening globally. So the only solution is to restart the system and create a high level of meritocracy. Now, does US have a high level of meritocracy compared to the rest of the world? Absolutely, 100%. But even that level of meritocracy has been tremendously diluted relative to 20 years ago, 30 years ago, 50 years ago. Would you guys agree with that? Very, very strict.
Yeah.
I mean, that's my scream of my soul, because I just dislike what's happening. It's unacceptable.
Okay. Thank you, guys. This was so great. Yeah, see you on the next week. Thank you for your advices and thank you for your time.
Sounds good.
Done?
Yeah,
That's
thanks.
it?
Yes.
There's no Q&As. There's nobody. No final thoughts. No closing remarks. Like no fired up things. And what are we doing with this? We sharing this with everywhere on the social media, Twitch, Twitter.
Yes.
Got it. Guys, Dan, Morgan,
See
you guys want to do any final remarks before we end?
Yeah.
Buy Bitcoin. That's all I got to say.
Buy Bitcoin. Dan.
Yeah.
Buy Bitcoin, not a financial advice. Dan, what's up?
Yeah, definitely have like a decent allocation to Bitcoin, and Bitcoin in your portfolio. But in general, I think like we're gonna see over the next year a lot of big applications in blockchain, at least at the business level, coming online. The beauty of it is that most people won't even notice or be affected by it. That's when you know the technology is actually working.
Okay, go crypto.
Okay.
Thank you, Manana.
Go crypto. Yes.
All right.
Enjoy your summer, guys.
Cool.
See you next week.
Thanks.
Bye, Manana. Take care.
See ya.
Bye.
Bye.